Hello everyone. Okay. Hello everyone. Okay. So I'm going to be doing a live weekly review trade section. So just give me a moment. Let me just. Okay. So it's like a culture for me that at the end of the week I like to number one take like look at some of the things I've done before. Look at maybe probably trades I took, how it went, losing trades, winning trades, and then also do a proper analysis from the weekly time frame. From the weekly, what am I saying? Sorry, from the higher time frame to do a proper analysis to understand my bias going into the next week. So yeah. So let me just quickly share my screen so that we can see the chat. Okay. Okay. I guess we're good to go. So I'm on the daily time frame for the Euro USD. So just like yesterday, as we established, price price did just that. We even took a trade yesterday. We even took a trade yesterday. Okay, just give me a sec there, guys. Okay. So yes. So we took it yesterday and more momentum to push below to this level. Can do watch into it. And then price rallied up to take out this buy side liquidity. So after buy side liquidity was taken out, then and this. So for next week, now the reason why I'm even saying that is because so then you can see this liquidity down here. So for Euro USD next week, I still have my eyes on this low here. So definitely except probably price action give us something otherwise. bullish for EURUSD. Sorry, I'm still bearish, not bullish. I'm still bearish for EURUSD. To stick to our buyers. So we're just gonna stick with it for next week. I have 3 pairs on my watch list going into next week and see. Yeah. Gold for quite a while now. Gold has just been rallying to the upside time frame, coming into this daily fair value gap. We have a little fair value gap here. Yeah. So we have this pullback on the daily time frame coming in right here. And we can see that along the line, this pullback price created might be having something like this. Might be having something like this. Something like this, yeah. And we can see how the last 2 previous days candle close. We can see that. So we had this pullback as a draw. So for gold going into the, and then I'm going to be watching this. Okay. So I'm going to be watching this level here. From into this fair value gap, then price. Yes. So going into the forms, does it close above the previous day candle or it closes below the previous day candle? If it closes below it, like Monday's candle now, like on Monday now, once then there's high probability that this hour draw is going to be valid. It will just give us so right now, especially going into the end of this year, 2025, the asset that whenever the economy is whenever there's a lot of uncertainty, assets that react, like those reaction you see, like is telling the story that the economy, it might be it's booming, it might be it's risky and all of that. Okay. So let's take a look at NAS 100. And then NAS 100 also has been going higher and higher for the past couple of days. For the past couple of days and the past couple of weeks. So, so on the daily time frame, I have this gap here to the upside to take out buy side liquidity. Might be having something like this. Yes. Okay, let's take a look at DXY because DXY is like the correlation of Euro USD because if the DXY is going higher, then the Euro USD is expected to be going lower. So let's use the DXY to confirm our analysis that we just did here. The, another name for the DXY is called the dollar index, USD pairs. That's Euro USD, GBP USD. So it's quite important to always merge them with this pushing higher like this. So the DXY is facing higher, so we're expecting higher movement. What is that? What is now telling us? What is that now telling us? Because the DXY is the correlation to Euro USD. So that's telling us that we expecting lower price movements on the Euro USD. I think it's one of the ways also to Euro USD. It's important to sometimes go look at the DXY. Where's the DXY facing? If the DXY is facing up and is facing higher, then EU is expected to be facing lower. So so it just shows that there is correlation between so so that's what Euro USD. So we see that on the weekly time frame and then on EU, we see price took out buy side. So it's giving us quite a good this previous day close. Like it almost completely covers like they're supposed to be EU is supposed to be acting opposite to the DXY. So also we can now look at it now. As long as the DXY has not approached this buy side liquidity, which means we're expecting sales on the Euro USD. Liquidity has still not yet been taken out. on DXY, which means we are still expecting higher movement on the DXY automatically or the next week. Okay. So that's it for you. I'm watching out for that gap. So this is why this level is quite important for me. So I'm watching this gap and then I'm watching this buy side liquidity. So yes. So use low now or high to be taken out. This is Friday's candle for NAS 100. So either of the high there, the low, either the low or the high to be taken out. So be taken out. So we'll be watching this gap and then we're watching this. That is why for good, I'm going to be waiting to see how on Monday's candle open and then closes. Does it close below this level? If it closes below this level, then you might be seeing more of sales. But if it closes above this candle, then we know that okay, our draw on liquidity here is valid. So we'll be seeking price to draw into this level here, or probably even go higher to take out this one here. Take out this one there. So yes, that being said, don't forget our risk management has to be in place because no matter whatever we just did now, it looks 99% accurate, but anything can still happen. Something can just happen in any part of this world now, and then you will see very complete implication on the charts. So, and we've seen that quite a number of time. Because, for example, there was a time I was trading like 1 pips for price to get to my take profit, but all of a sudden, price just reversed from that point, went back to entry, even went back to stop loss, even just kept going down because I was actually buying back then. So, and it turned out that within that same period of time, there was a news that came out. So it doesn't price does not respect whether you have a take profits or you have a stop loss somewhere. It does not look at that. So this is why our risk management going into next week is very paramount. It's very paramount. In fact, all three of them has to go hand in hand. That's your strategy, your risk management, and then psychology. Psychology in the sense that, for example, fear of missing trades, fear of taking trades, indiscipline. In fact, indiscipline. So, good analysis, that's good technical analysis, coupled with good risk management and coupled with a sound mental framework. A sound mental framework. All three of them has to go hand in hand because any of them that has a default they can be a problem because you can have a very accurate strategy. In fact, the win rates can probably be up to 70 to 80%. But because of poor risk management, you can still end up losing your account. And you can have a good trading plan in the sense that in that your trading plan, you have factored in risk management and then you have in your trading plan, you have also factored in that you are never going to take trades on the go. That's emotional trading, just pushing buttons on the go. Any trade you are taking must be backed up with a proper analysis, before you take any trade. But because of the psychology, the psychological aspects which we have not worked on, so you will find it difficult to stick to your rules. You will find out that you are greedy. You find out that you are impatient. You find out that you are scared. You don't know how to sit still when you see trade in profit. You end up closing the trade, and then you see that the trade end up going more into your direction, or 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 when you are supposed to close the trade and just accept the loss there. You Yes. Now, and this is one of the things that produces revenge trading a lot. Let's say, for example, now in your trading plan, you said that, like me now, on my trading plan, it's a rule that at least the max number of trade permitted to take for a day max is two, and that's because maybe I take one trade and it's a losing trade. I'm only permitted to take one more, and then after that one, done for that day. If it's a losing trade, we accept the loss and move on to the next day. But sometimes it can be difficult. Like you'll be like, why should like we find it difficult to accept that loss, and then we end up looking for, and then that can also lead to over risking. Let's say now, for example, now, um, the first trade you took on your account, you risk 10%. Let's say you have a $100 account now, you risk 10%. So you are short $10 now. So that's $90 remaining. You take another one, you still stick to your plan, you risk 10%. So now you are still short, you are now short $20. So it's remaining $80 on your account now. So because now you want to now revenge trade now, and maybe um you want to enter a maybe you want to enter a 1 to 2 or a 1 to 3 hour trade now, and you are supposed to risk 10%. So you now be like, okay, how can I recover, like bring back my account to where it was, and then still close that day in profit? So that kind of thing is quite dangerous. So you might end up risk 20%, you risk 30%, and the market has a way of punishing that kind of behavior. Even if for once, maybe there was a time it allowed you to go scot-free, but later on, you will just you will just notice that you ended up giving back those profit, those money you made, you ended up giving it back to the market. So you end up risking maybe 20 to 30%, and then you now be short $50. And then when you now get to that point now, you have totally lost control. That's where self-sabotage now come in. You just keep placing trade till when you are now probably down $2, and then that's when you now realize that oh, what am I doing? So that's it for today, and thank you for staying to now, and see you next time, guys.